Happy New Year everyone, this is Ming Jong. I'm glad to be back in 2021 with another new episode. So in this video, I'm going to share with you about Cathie Wood warns on the market correction is coming soon. So during the interview session with the Bloomberg about 2-3 weeks ago, Cathie Wood, the CIO and actually the CEO of the ARK Invest, just warns about there will be a correction coming soon. And I think that it will be very interesting to tackle this from the chart point of view with the technical analysis just by looking at the price action. And let's see if we can just extract any useful information out or any telltale sign that we can spot from the chart about the market correction, and if there will be a market correction, to what point or what extent will the correction be, and also to about the price target for the S&P 500 if there is a correction come. Alright, so before I just dive straight into the chart, let's just have a quick view of what Cathie Wood has to say during the Bloomberg interview session. It's about a quick 1-minute session, so let's just have a quick look right there.
And whenever things have gone this well for me, usually there's a correction around the bend, and I want to gird for it and protect it, and also prepare our investors for the possibility and say, just keep some powder dry, because what we're looking at here are long-term, again, exponential growth trajectories that they're not going to be stopped. You can't stop progress. And today, when the government tries to stop progress, well, it usually fails. And so even if we go through a correction, and I expect one. We must almost always expect corrections. I just have to keep my eye on the prize. But I do want to warn investors that, in the investment world, it's not just straight up and to the right. We will have those corrections. So again, we just keep our eye on the prize. We have a 5-year time horizon. We are fully invested at all times, which is what we are supposed to be. But that doesn't mean that investors shouldn't, sometimes take a bit of money off the table and keep some powder dry.
All right, so I think everyone just heard what Cathie has said. So let's just dive straight into the chart and let's see what else can we extract from the chart alone. So as we can see in the daily chart for the S&P 500 as shown here, so far I think last time that we probably stopped somewhere around there and we went into the holiday seasons, and so far I think it's just breaking all-time high level. Currently is 37.66 right there. So in terms of the structure, it seems very bullish to me. Let's zoom out a little bit there. So here is the COVID sell-off, and we have a accumulation structure right there in the hourly chart, and with a sign of strength rally, backing up action, and then marking up, forming a reaccumulation range. So far, we have another reaccumulation range breaking out, and another reaccumulation as a backup action, and also a breaking out. So it seems to me there isn't any immediate threatening moment yet. So far, we have this kind of the sign of strength rally, and with an immediate profit taking action, we can see it right there. So far, the volume, in terms of the volume, I think we have seen supply has been decreasing. We have a localized increase of the supply right there, but look at the results. There isn't much damage done to the price structure. In fact, it's just barely tested the support zone right there, somewhere around 3600 to 3700, and we have another attempt to break down, touch 3600 level with relatively high supply level, and subsequently just close to the holiday seasons, Christmas plus New Year's, and the volume just dies down. With the price action, the price just lift up. And in terms of the structure, let's take a closer look right there. So this looks like a sign of strength rally out from this accumulation range, and look at the shallow type of the reaction. So in fact, there is a very threatening moment when we have this kind of the rejection tail with a spike of the supply level. So I actually just expect some kind of the pullback, maybe to test the middle part of the range right there. But in fact, the retracement is very shallow, and subsequently we have seen another test and eventually just a breakout. And with this kind of the uptrend channel, with the price just traveling within the uptrend channel, so if we were to predict some kind of the market correction, I think the only clue that we have is some kind of the overbought. So let's look at this trend channel right there. So this is the up channel, and we can see that the price is actually traveling within a channel with the supplies decreasing. So we have touched quite a few times right there at the overbought of the up channel. So one thing that we can expect to have some kind of the resistance is probably to hit around 3800 level. That should be coincide with some kind of the channel overbought overthrow, and followed by another pullback, maybe similar to this. But should the supply just come in and also with a relatively high supply level, maybe something like this, or even something like this or this, then probably we can expect maybe a significant pullback or reaction. I think one of the useful way to sort of predict or just anticipate the price action is to actually look at the past structure. So let's just take a look somewhere around there. So this is a trading range, a reaccumulation range, maybe similar to this kind of the reaccumulation range. And once we have this breaking out, pullback, tested the support, now turn, sorry, the resistance now turn a support level, and we have seen a move up, a rally up, followed by a very tight consolidation with a horizontal consolidation, and then acceleration up. So I think this is a very important characteristic. So this kind of the acceleration with the climatic rally up is one of the characteristic of the end of the uptrend. So you can see that this is a climatic up move, and followed by a change of character bar, and then a change of character with the spike of the supply level. So this sort of the characteristic is something that we should always look out for if we anticipate some kind of the correction. But of course, the correction might not just come with a climatic up move. It usually comes with either, first, this is the climatic up move, like with acceleration to the upside, and second, it could come in like a lack of the momentum type, maybe something grinding up action, and eventually just fall off. So this could be something like this. Maybe you have this kind of the shortening of the truss and not even touch the overbought channel, and the volume right there could be explained as a fading of the demand. So whenever there is a spike of the supply level, something like September or even in October, somewhere around there, then we could expect some change of the character. So this is the movement that I will be watching out. So in terms of the target price, then I think it's very clear, because the first support level will be 3600 level. So let's have a scenario. So this is the most bullish scenario where we have an acceleration to the upside, similar to this kind of the action. So we have a run up, consolidation, and another acceleration to the upside. So far we have a breaking out, running up, and maybe some kind of the consolidation. And should we see another acceleration to the upside, maybe we can mimic this kind of the movement, then that should hit the channel overbought, and followed by a spike of the supply level. So this is something that we need to see in order to have some kind of the serious reaction or pullback or market correction that we anticipate. And in terms of the target, let's just have a quick measure for the last pullback right there. So price range, so let's just use this. So that's about 10%, 360 point, and the target, the pullback target is actually just for under this resistance now turned the support level. So that's roughly around 10%. So if we take the previous reaction, so maybe this reaction, that will be, again, I think it's somewhere around 10%. So again, 10%, and also is falling at the previous resistance, now become the support level. So I think it just makes sense if we have a serious reaction and without much catalyst or the bad news, whether it's a coronavirus or something's wrong with the vaccine or any other news that we can't really predict, then just by technical analysis, I think it just makes sense to have maybe some kind of the restoration up, and then we have a fall to test the previous resistance, now turn the support level right there near 3600 level, or maybe we can extend it to somewhere around 3510 or 3520 to around 3600 level. So this support area should be the first level that we'll be watching should any kind of the pullback or market correction come with the spike of the supply level. So all this is just based on the past market correction as an analog. So about 10% of the retracement, and also for just right at the resistance turn support level. So if this time is similar to the past, then this is something that we can expect for the market. So another thing that I would like to highlight is definitely this kind of the overbought line. So if you can see this dotted line, the purple dotted line or the blue dotted line, so we can see that it just can trace back to the past few years. So that is actually previously as a demand line. We can see quite a few touch. So this is like a trend line, a demand line, and once it's broken, so you see that there is a failure right there. That's during the 2019 sell-off. So it just kind of acted as a middle line there. So red test as the resistance level and have another test, and then eventually just have a capitulation. And during this acceleration up, it just kind of go back to this line again, and then have another reaction, get tested again, have another reaction. And during just before the COVID sell-off last year, 2020, we have a kind of overbought, overthrow situation, penetrating this resistance, or now become the supply zone or overbought zone, and eventually overbought, and we have this COVID sell-off. And right after that, we have a very quick recovery up, and during this, I think that's somewhere around September, we have touched this line again, so that become the overbought line and have a reaction. So this is another almost a touch, attempt to touch, and have another reaction. And now it's kind of just right at this supply line or the overbought line. So it's kind of consolidate or grinding up there. So that probably is just enter into the overbought region just based on this trend line alone. And one thing that we need to watch out for is whenever we have this kind of the overbought situation, it doesn't necessarily mean that the price must react immediately. In fact, just like the RSI indicator or any kind of the overbought, oversold indicator, it can just stay there for quite some time. So even just right before this COVID sell-off, we have this kind of the overbought situation that lasted for maybe 3 months or so. Let's just have a quick look there. That's December and that's February. So that's roughly around 2 months inside this overbought, overthrow region. So that could happen in this kind of the situation again. So we just need to pay attention regarding what kind of the price action that we have. So if we really going to get a correction, I think which is quite normal once we have seen a very tremendous run up, something like this, or even something like this. So just like what Cathie Wood has said, whenever everything went very well and has been going on very well for quite some time, it's quite common to see a correction. So it's just that we need to watch out for the price action. So this is maybe something that we can watch out for, the change of character bar, which is a big spread bearish bar. In terms of the spread, you can very much differentiate based on the past price action. All of these candles are very small and very mild, not volatile at all. So suddenly you see this kind of the big spread volatile bar with the spike of the supply, then we can probably assume then there's a correction is on the way. But so far we can see that in terms of the volatility, is quite a small spread bar right there. In terms of the volume, the supply level, we have seen some supply absorption right there. So there is supply coming, increasing of the supply, but no results, no downside results yet. So definitely keep watching the price action and also the supply level, because we are just right at this overbought region based on the trend line that I've drawn. Alright, so that's my view on the current market right now. So right now I definitely do not see any kind of the threat based on the price and also the supply level. But certainly we are in right at this overbought, overthrow region. So look at this, every time we hit that, then there is a correction right there. So definitely watch out for this. If should we get something similar to the COVID sell-off, I have no idea, but definitely just watch the price action and let the market shows it through action. Alright, so this is the end of the video. Hope you enjoyed it and get something useful out from the video. So if you like the video, just click like and also check out the video that showed up on the screen right now if you would like to increase your winning rate in trading. I will talk to you soon.